Hey traders, control the trade here. This is Jonathan. Sorry, I lost my voice a little bit here, so bear with me. We're looking at a chart of Zoom, and you can see I have a line on the chart here at 325, which is something that was drawn a while back, and that seems to be support right now. But really, that's not why I went live. I went live to kind of take a look around the market, see what type of opportunities there are before things slow down, which they are kind of slow right now anyway. And also, I had a video I was working on called the five mistakes for, I guess you could say, any trader to avoid, or even beginner traders to avoid. Even 5 mistakes, let's say, that I need to work on avoiding every single day. These are the types of things that no matter how much you trade, no matter how much you can still make the mistakes. Just like you're trying to lose weight, you know not to eat sugar, you know to exercise, you know to sleep, but sometimes you just don't do those things and you make bad decisions. Same thing in trading. So we're gonna have a reminder here. These are 5. There's not, the list is it could go on. You could probably come up with 100 things not to do, but these are 5 that stand out to me. So let me just take a look at a couple. Let me bring up the spider real quick just to see where we're at in the market, and we're strong. So the 5. Let's see. I'm gonna bring this up. It's 5 things, and I'm live here, so apologize, and it's not flowing here. But there's the 5 things. Number 1, I call it feeding Gizmo after 12 p.m. 80% of the volume in the trading day takes place, but basically the combination of the first 20% of the trading hours and also the last hour of the trading day. So, that just means that there's not that many ideal times during the day to trade, because you need liquidity, you need volatility, you need buyers and sellers. And when the volume slows down, that's just lacking. So once the volume dries up, so do the trades. Opportunities become less, and the market, for lack of a better word, gets incredibly choppy. So if you've ever been in a trade and maybe you're bouncing back and forth between I'm going to short it and then you say, oh shit, I'm going to go long. That's the choppy nature of pretty much algorithms, cleaning you out and chopping you up. And that's just not ideal trading conditions. There's no clear path. There's no clear direction. I'm saying 12, really I'd say 11:30, to be honest. 11:30 a.m. Eastern is pretty much when things really dry up. But 12, just for my little Gizmo Gremlins reference, if that reference is over your head, it's just, look up Gremlins, look up Gizmo, and once they are fed after 12, they turn into gremlins. So it's kind of like, just like trading. Once you start trading after 12, you become a gremlin yourself, because you're starting to make bad decisions, at least for me, based on a market that's not serving day traders well at all. I will say, so, between 9:30 and 11:30 approximately, that is the golden time to trade. That is the best time to trade. Really, probably 9:30, really 9:45, let's say, because we want to see how things open and settle instead of jumping on things because of, FOMO. It's better to kind of let things open up, see how they're looking, and then make your decisions from there. You have a better grip and you have some candles to work with. So the first 10 minutes of the day, I mean, let's look at Zoom. I mean, this is pretty ugly example here, but you can see we if you jumped in this trade and you see that it started to go up to, in the 330s, you got chopped up and knocked out pretty quickly here. My trend line here, or let's say my important price, is 325. So you be riding this down. Let's see how it opens the first 10 minutes. We know that we had a really ugly first 10-minute candle, and then the bottom of this candle, the low, is 328.21, and we closed almost below that. And it's just been really ugly. So I think this candle right here is where we really lost the trend, or where we really lost any type of support. So I just wouldn't have been in a trade like this. Maybe you short, but it's just so choppy. Like, even if you tried to short this, or go long on this, you would have got chopped up over here. Maybe this would have been a good area to short. I mean, there's just no rhyme or reason on this chart. It's really ugly. And if you just jumped in blindly the first 10 minutes, you probably would have not had a good experience here. Maybe not my best example. Again, this is on the fly. So let's see if I can take a look at another one here. So one thing I do want to point out, though, when I'm showing this, is the volume, how it's drying up. So you can see this huge amount of volume on the opening first few candles here. So this is 9:30. This is 9:30. Now, we did have a nice volume spike here. I'm not sure, that's probably some sort of short squeeze action going on there. That's not typical. But you can see how quickly the volume started to dry up here, and I would expect it to level off and stay really low the rest of the day until maybe about 3 o'clock, and we'll start to see a pickup there. Let's look at one of the more mainstream stocks, Apple. So Apple, you can see, look at the volume here. We're just steadily decreasing. It gets real choppy. Now there's a bull flag pattern in here, but again, once we get later in the day and we get closer to 11:30, just check back and look at that volume. So that was number one. That was don't feed Gizmo after 12, which is basically don't trade after 11:30. Every time I do that, it causes mistakes. Actually, one more thing to add to that. I remember when I first started to look into getting into day trading and started to day trade, and I'd see other traders on Twitter, and they would be like, okay, I'm done for the day, and it was like 10:30 or 11 or 11:30. I was like, what? You're done for the day? I didn't understand that until much later, and I kind of learned the hard way. So that's why that one's at number one, and because you'll see when we go through the rest of the other five that they all kind of go together. So number two is staring at the chart or the price. So especially when a trade goes against us, it's natural to get that like deer in headlights reaction. I don't know about you, but that's true for me. Especially when something went against your plan, you get that deer in headlights reaction, and you literally just are staring at the chart. Maybe your phone, maybe your computer. And it's one of the worst things that you can do when you're faced with a losing trade. Now, if you had your stops on correctly and things like that, then you wouldn't really, you just lose the trade and maybe make a decision from there. But if you're kind of just in there and it's not working out the way you expected it, then you really could get yourself stuck just staring at that chart. And then, the best strategy is to just cut and run when it's not clear and get a clear mind for the next trade. That's the other thing, is you get to clear your mind, because then you're just stuck staring at that, and your mind is starting to justify why you're still in the trades. And we get hung up on a particular ticker, maybe we want to win the money back, and then we start to just that's why I'm live here, we start to solely focus on that trade or that stock. And number three, let's go right to number three, because it definitely goes together with number two, holding and hoping. So kind of the same thing. When you're in a trade and you're just kind of hoping, it's related to two, that the trade's going to work out. You're just gambling at that point, and you're just hoping at that point, and that's not a strategy. Like number two, don't let this happen. Losing small and fast is a much better way for day traders. Use the loss as a learning opportunity, and now refocus on better opportunities that you'd otherwise be missing. So maybe you have support and resistance set for this particular stock, and one of your resistance levels broke. So maybe cut the trade and look for the next resistance level, the next support level, because maybe that'll be your next new trade. That's just one way of looking at it. That was number three. Number four, averaging down. This mistake's really common, and many think that it doesn't belong on this list. Probably, I would assume. Some probably even think that this is a sound strategy. Maybe if you're a long-term investor, I could see that being the case. Hold on one second. Oops. If you're a long-term investor, I could see that being the case. If it's a company you believe in, then averaging down, sure. But we're talking in the context of day trading here. So this is the next level of mistake that's related, again, to 2 and 3. And unless you have unlimited cash and you can literally buy your way out of a losing position, the chances are you're going to put yourself in a deeper hole. And, you have to ask yourself, is it ironic that your losing trades become bigger losses than your winning trades? Yes, partially. But we also tend to take profits quickly, and we tend to let our losses get out of control. And then you start to average down, and that makes them get even more out of control if the trade continues to go against you. You don't typically, averaging up when you're winning is a good strategy, and that's how you can get bigger gains. That can work, but typically you're going to see it go the other way. So then number 5, and this one wraps it all up, is losing control. So, if you watch my videos, the name of my channel and my Twitter handle is Control the Trade. I end every video with the phrase, don't let the trade control you. This last one on the list sums up the first 4, I'd say. And trading later than you should leads to staring at the charts and holding and hoping, averaging down, and just making bad decisions, which is losing control of the trade. All those things add up to losing control of the trade, losing control of your mind, and just losing control altogether of your money too. So as a trader, we must be in control of our capital that we're putting to work in each trade, and in control of our psychology. if you're sitting there, if the trade, if you're not making money on the trade, you're not pocketing that cash as a day trader, that's usually not the way to go, and that usually leads to the top five, that leads to the top five things that we've talked about here in this video. So I hope this makes sense. I think you should watch this back, listen again, apply it to yourself, and see if this is true for you. If you've been guilty of any of these 5 mistakes, I know I have, and it's really hard to work through these mistakes. I'd say one of the hardest ones for me is not trading after 11:30 because I have alerts set up, so there might be opportunities. I'd say it's 80% of the time need to avoid that no matter what's happening. There are times you'll see a short squeeze in the middle of the day, and I hate giving like what if scenarios because it kind of ruins the whole purpose of the rules. So it's best to just follow your rules, but we all know there are going to be opportunities that come out of nowhere, and if the volume is there, then I'm all for it. But if it's just trading and looking for trades and just trying to get yourself in a trade, then that's when these rules need to be followed, and you have to have the discipline to stay out of those types of trades. So those are the 5 mistakes that I'd say you've got to avoid as a day trader. Let's take a look at a few more charts here and wrap this up. I just want to look around the horn, see where we're at with the market since we're live. So the spider is just consolidating. It's at 420.59 right now. We're still near all-time highs. Nothing wrong with this market. One of these days, they're going to pull the rug, just not yet. I'm surprised it hasn't happened yet, to be honest with you. I did think that May would kick off a big turn. I don't think that possibility is over yet. I do still think that is a possibility, though. A strong possibility. This is unsustainable. So I sound anyone who's bearish right now, let's say, and I'm not bearish against the market in general, but there has to come a point where there's going to be a correction. There's going to be a cycle change. So when you're at the top of market and you're talking about lower prices, you can sound like an idiot. And just like if back in March I had said, okay, this is a great time to buy, March 2020, you would have thought I was out of my mind. Corona and everything that was going on then, and the market being chopped down big time and having a monster correction. So we're never going to sound in reality or like we know what we're talking about when our thesis is contrarian. So same thing with Bitcoin. I think I put a few tweets out about Bitcoin when it was like 60 in the high 50s and the 60s, and thought that would be the top right there, and it sounded crazy at the time. So no one's right 100% of the time, but you have to look at this from a long-term perspective and know that the market's not just going to keep going up in a straight line like this. We all know that, right? So just something to be aware of, and you don't have to get the turn exactly right, but you don't need to be, as I learned, you don't have to be the first one to the party. So you can still make money as long as you know the trend, and the trend right now is up. So trend's your friend until the end. Cliche but true. So again, I think that's it for the day. 11:30. I got another good half an hour to kind of to check my alerts and see if there's any opportunities out there. It does seem like it's kind of a slow day overall, volume-wise, and you can see the volume on the SPY going back to our number 1 point in the video. So hope you rewatch the 5 mistakes to avoid as a day trader, and when you learn from them. If you have any questions, please put them in the comments. Be more than happy to discuss, and if you disagree with any of them, I'd be more than happy to hear your point of view as well. So I really appreciate you watching. I hope you subscribe and like this video, and remember, don't let the trade control you.